You trade options, you know what it means when a position is in the money. But if you want your portfolio to get in the money and stay there, you need something entirely different in this market. Institutional quality intelligence and insights shared by the smartest experts and delivered right to your digital doorstep. That's what my next all-new guest is dedicated to. Plus, she has unique insights and perspectives for this market because she has reported on Canadian and U.S. stocks and trends for a decade and a half. Her name is Amber Kanwar, host of the In the Money with Amber Kanwar podcast. Amber, thank you so much for joining me. So Amber, let's just talk a little bit about your background since I haven't had you on the podcast before. I mean, you've been writing and talking about Canadian and U.S. markets for some time, right?
Yes, 15 years I have been writing and talking about Canadian markets. I started my career at what was then BNN, which was Canada's national business news channel. And I started as just a little young cub in the newsroom. And I don't have an MBA, I don't have a CFA. And really, I'd say like watching financial news was my crash course in finance. And from there, as I started kind of from the ground floor, and I became one of the senior anchors over my time before I left in November. By then, BNN had kind of signed this deal with Bloomberg in the U.S. So we became, Bloomberg's presence in all of Canada as well, which was really cool because then we got to really lean on their heft as well.
Got it. Well, you've now launched this podcast, In the Money with Amber Kanwar. I was kind of thinking of how best to describe it. In your own words, that you're delivering institutional level insights to everyday investors. Talk a little bit about that mission and what it is that you do on your show there.
So after 15 years of doing this, I kind of know what makes investors tick, right? At the end of the day, you can talk macro, you can talk about trade stories, you can talk about business in large, grandiose sense. But at the end of the day, what people really want to know is how can they make money? How can they retain money? And we sat in such a privileged position. I still sit in such a privileged position where I have access to these billion-dollar fund managers who all they do is spend hours and hours a day trying to answer that very question. What stock is going to make me money? Which stock should I avoid because it's going to hurt my money? And over time, I started to develop a skill for extracting that particular unique insight out of the guest, right? Because a guest can go anywhere, but at the end of the day, I'm a conduit for an investor sitting at home wanting to have the obvious questions answered. What's the downside? What's the potential upside? And so, after 15 years, I figured out that's kind of what people want. And to be honest, that's what I have the most fun with as well. I want to make money too. So, I feel like that's what makes me a good interviewer because like I'm really advocating. I want to get to the right answer. I want to stress test these ideas and do well by our audience because I think that's the only way that we succeed. So I kind of picked that as sort of my niche. And then I decided to set up In the Money. And the great thing about a podcast is, well, you know this, all of a sudden, Mike, people have attention spans, right? They have attention spans for long form content. And it's kind of this beautiful reawakening of an old medium. It's radio, let's face it, it's radio, but a beautiful reawakening of an old medium now with new distribution that people are finding. And I can ask that follow-up question, and I can ask another follow-up question, and I can talk about one thing for 10 minutes. Whereas before in my old life, on TV, I have 7 minutes with somebody. I have 5 different topics to get through, and each question, all of my next questions are a trade-off between do I follow up on that previous point or do I have to move us along? And at least in this instance, I don't feel as rushed. And I think the guests like it too, right? They get to open up a little bit more.
Absolutely. And, it's kind of interesting when I look at some of the episodes you've had recently. I mean, it's not any one niche. I mean, one guest was talking about betting on gold, water, and infrastructure. One was shareholder activism in an age of chaos. I mean, how do you sort of choose where you want to go with these things? And are you seeing any kind of common themes and threads in this market environment?
So that's also what I think sets the podcast apart, not to toot my own horn, but I will. There's tons of investing podcasts out there. There's tons of business podcasts out there. Some of the investing ones are like a standard cast of characters. And so you're subject to their bent and their view of the world. And sometimes it's dogmatic and sometimes it doesn't change. And some years they do great and some years they don't. But I just get access to everybody, right? And so to your point, I can do a gold episode, I can do an energy episode, we can do tech stocks. Like I can kind of go anywhere because I can just draw in the expertise. And to your point about how I make it relevant, like that's all I did as a journalist, right? It's like, here's the guest in front of me. What's all the news flow and how can I marry it to my guests? When DeepSeek came out, it was like a Sunday night, if you'll recall, and it roiled the tech stocks. On Monday, I was speaking to an investor, Ivana Delevska of Spear Invest. She was already booked. She was booked weeks ago before DeepSeek. We were going to talk about tech stocks. And we had already figured out, here's what we're going to talk about. And then we walk in on Monday and it's total tech wreck. And we just throw the questions out the window. And I say, Ivana, all we're going to talk about is DeepSeek. And then on Tuesday, I had a DeepSeek episode, before other people did. And so I feel like that nimbleness in journalism, you have to be nimble and kind of go with the flow. So I can marry that to any guest. I can make any guest sort of seem relevant.
Yeah. Yeah. Amber, I want to talk about kind of the differences and similarities that you're seeing between when you have guests on talking about U.S. markets, Canadian markets in this environment. I mean, what is the different sort of tone, the different sort of coverage areas, and sort of the different way of looking at this market, depending on which side of the border you may, do your main business in?
So I'll say something generally, because I interview fund managers on both sides of the border. And honestly, even Canadian fund managers over the past couple of years are guilty of really abandoning Canadian stocks and just going all in on U.S. stocks because of U.S. exceptionalism. It's just been such a hard tape to try and fight. So with exceptions, of course, in the Canadian market, there has just a lot of Canadian money, quote unquote, has become U.S. money. So I'll say this generally, leading up to the tariff announcement, even like a week or two before, there was this idea that the turbulence is creating an opportunity, right? What do they all say? Like, buy the dips, buy the dips. I'm not giving up on Microsoft. I'm not giving up on Google. Now that the tariffs are in place and investors realize how much Trump means it, I don't have as many buy the dips people coming on. And to their credit, I have had a few guests who said before this, we're in a structurally different market. Tech stock outperformance is not going to be what leads us out of this. Obviously, we know commodities have done exceptionally well, and that's the main reason that the TSX is outperforming the U.S. markets, because we have a lot of gold stocks and the U.S. markets don't. But really this discussion, and that's what's coming up, don't buy the dips. You don't get paid to be a hero in this market, and remaining defensive, because what is the essence of investing, right? You buy a company because you try and figure out how much profit are they going to have this year, next year, 5 years from now, and then you discount that to what it's worth today. Do you know what profit your company's going to have tomorrow, the next month? Like, even these companies will see an earnings season, they won't know, right? They're going to yank their forecast, or like United Airlines, they're going to offer 2 forecasts. One that does well in basic climate and one in a recession scenario. And it's like, but which is it going to be?
Yeah, absolutely. Absolutely. It's kind of interesting you bring up commodities. I was going to talk about that anyway, but I mean, you've got this tremendous strength in gold, silver's doing pretty well. But then you've got things like copper that was doing well and then got hit on economic growth concerns. And obviously the energy markets, oil's been underperforming. How do you sort of synthesize that? I mean, what are some of your guests looking at in terms of differentiating in that space?
So for gold, I think that this is a sector that Canadians know really, really well, and maybe a little too well, because they've been burned. They've been burned so many times by these mining companies that have been terrible, terrible stewards of capital. And I want to underline that, right? They just haven't managed windfalls well. And so some investors are permanently just excommunicate that sector. And, I think there's a pejorative around gold investors as gold bugs and that sort of thing. And I feel like there are many investors that I speak with that say, no matter what it's doing, we don't touch it. Imagine that, right? That you would just put an asset class like in a penalty box like that. Now, some say that that's actually a bull case for gold
Yeah.
because it's still so under-owned that as it continues to make all-time highs, it's going to bring more and more people off the sidelines. I would say gold is entering a period where all these CEOs in charge know what happened the last 10 years and understand that shareholders are going to have their heads the way they had them, 10 years ago, if they aren't good stewards of capital. So
Yeah.
there's a tentative, this time is different sort of vibe in gold. Energy is a whole other sector because considering how much energy contributes to, Canada's economy, and this is slightly changing, but not really. Would you believe that there's only really 2, maybe 3 dedicated energy funds in this country? Like, that's how much we are one of the largest oil producers in the world, and we have almost no dedicated energy funds. And the reason is, fine, long time ago, they were also bad businesses. They levered up, they made terrible deals at the wrong time. Okay, cut to today, that's just really not happening. All these companies have lowered their cost structure. They're taking money with one hand and giving it back to shareholders on the other hand. And yet they still trade at tremendously low valuations. A lot of them don't have any debt anymore on their books and are just gushing cash flow. But
Yeah.
again, it's a sector that people are slow to return to. Now, the volatility in oil prices definitely doesn't help, but a lot of these companies, they make money, like life above 50, for example, $50 per barrel is like fine for them. It's not amazing, but it's fine. They're not going to go bankrupt, and they can control things like production. So I think that's a very interesting sector, that both of those sectors remain in the penalty box in the
Yeah.
minds of investors. And I would say, outside of the few energy investors that I know are very bullish because that's their focus, it's still one that Canadian investors are slow to come to. But I just did an interview actually with his name is Cole Smead of Smead Capital.
Yeah.
He's an Arizona based investor, so American, and he does not have an energy fund. He has a value fund, but all of his picks were energy and Canadian energy picks
Yeah.
because he sees the valuation gap. Canadian energy companies trade at historically much cheaper than U.S. ones. So I thought that's pretty interesting. Like, the energy fund guy always has to say energy's great, but not the value guy, right? He has a choice.
Yeah, absolutely. As we get towards the tail end of our conversation, I'm just kind of curious, any particular insights that have stood out to you and thoughts on how this US Canadian tariff trade fight, scramble, whatever you want to call it, trade war, even some people are using that term. How do you think this shakes out, and what can an investor do?
It is a trade war.
Canadian or US for that matter.
It's the trade war, 1,000%. In our liquor stores right now, there's no American wine. They've yanked it all off the shelves. Some of the things that go the most viral for me on my social media is talking about Canadians pulling back on travel to the US, and that's a real thing.
Yeah.
Canadians, if, notwithstanding, I'm going to come to Miami, but we hear a lot of stories of Canadians choosing for the summer, even for winter, not going to the US. There is anger there because it's like, your best friend has turned around and said, you're using me, you're abusing me. And it's left, sort of a bad taste amongst Canadians. So that buy Canadian thing is very real. It showed up in
Yeah.
grocery stores. It's a very real thing. Our stock market does not reflect the Canadian economy the way the US stock market reflects the American economy. Our stock market is banks, energy, and gold stocks. So in many ways, we emulate kind of what's going on globally instead. And to be honest, Canadian markets, we're still down, so we're not doing as well as European markets, but we're
Yeah.
benefiting from a general sell America theme, right? That's what's happening in 2025. It's sell America, sell American stocks, sell the US dollar. And Canada somewhat is benefiting from that, though not totally, but it's largely because of gold stocks. Europe, of course, has benefited the most. while also they're increasing their defenses. So that's a big reaction to what's going on to US policy. So I don't know, like, yeah, fine, we can all sign a trade agreement and maybe move past. We also, by the way, we have a federal election next week. Or we have a federal election on April 28th, and that could decide a lot of how this future progresses, right? Whether it's more conservative or more left-leaning government, which is what it looks like it's going to be, what that cooperation looks like. But I will say there has been damage that even an agreement, I don't know that that can solve in terms of relations. There was a company, by the way, Transforce, TFI. It's a Canadian trucking company, and they announced maybe a month ago, and this is very common. They do most of their business in the U.S. They're going to re-domicile in the U.S. And we've had companies do that before, take advantage of taxes or whatever, just to ingratiate themselves more to the U.S. The backlash was so severe against TFI that within a week, they had to abandon that plan. Even though it was the right, like on paper, it looked like the right thing to do for shareholders. But whoever made those phone calls in the boardroom, like think about that for a moment, right? Like that's how strong it is, that maybe it would have been better for shareholders if they were able to re-domicile. But because of the mood in this country, in Canada, they didn't.
Yeah. And those are some great insights. Again, I think that's one of the benefits of having, getting some new guests on the podcast that can share a different perspective. And I mean, you mentioned earlier, you alluded to it, you're going to be joining us for the Money Show Masters Symposium in Miami. It's May 15th to 17th. What are you looking to get out of it? What are people talk to you in the hallways there or see you doing some of your interviews? What do you think they're going to pick up at that event?
We're so used to tech stocks, right? It's so hard to wean ourselves off of our addiction. For me, I have a hard time weaning myself off because they've been such fabulous, sort of sexy stories. And I know you've got great bulls and Tom Lee, and even Tom Lee is a little nervous. Dan Ives, I have never read a bearish note from Dan Ives until a month ago, right? Like, so I'm really looking forward to unpacking. Many people called those type of people perma bulls.
Yeah.
And now they're singing a different tune. And I don't know, is that contrarian, or is that an evidence that, wow, this is real. This is not a run-of-the-mill 20% pullback, that this is something really serious when the amazing people that you have on that are known for calls that, let's face it, have been correct and on the money, are now getting nervous. And so I'm really excited to like unpack that with them.
Yeah, absolutely. Well, listen, Amber, I really appreciate you taking some time out here to share some of your insights. Viewers, if you do want to learn more from Amber, get a chance to talk to her and see what she's talking about on her show, she is going to be joining us for that Money Show Masters Symposium in Miami. It's May 15th to 17th at the Hyatt Regency Miami, right downtown, right on the Miami River. It's a beautiful location, beautiful time of year, and you're going to get a lot out of this event. You can get the details in the description below and click the link if you want to register. Amber, thanks again so much for your time.
Thanks. It was a pleasure.